Good morning, everyone, and welcome back to Morning Markets from True Potential, our first episode of 2024. As we look ahead to the first full week of market activity post the festive and New Year break, a couple of things that will certainly be in focus for ourselves and for the wider market. Turning first to the US, all attention will certainly be on Thursday's inflation report, where we'll be looking for ongoing evidence of the change in that inflation dynamic in the US. That will be important just given how the market behaved in the November and December of 2023 and the strong improvement that we saw as markets started to price in the possibility of more interest rate cuts in 2024. The other aspect in the US that will be important from a bond market perspective is the issuance. We've talked about this a number of times through 2023, but this week we will see $110 billion worth of Treasury bonds issued in the US across various different tenors of issuance, and we'll have to see how that is accepted by the market as we go through the week. In other regions, I think the key things to focus in will be in Europe, we'll get retail activity, in Germany, industrial production, the UK will get GDP data as well. On the corporate side, we'll continue with the reporting that started last week for UK and European companies. We'll hear from a number of UK retailers this week, including Tesco and Marks and Spencer's, which will give an insight into trading over the Christmas period, but also an indication of the strength of consumption in the UK market as well. As we get to the end of the week, we'll start the quarterly reporting season for US companies, and we'll hear from a number of large US banks on Friday. Just then, looking at last week, one of the key reports that I just wanted to bring to life was the US jobs report, which continued to indicate ongoing strength in the US economy with 216,000 jobs added. Although, like previous months, we did see quite a revision to the October and November data, so on a net basis, 145,000 jobs created. The unemployment rate remained unchanged at 3.7%, although in large part that was driven by a reduction in the participation rate. Wage increases, average hourly earnings increasing around 4.1% in the report. That probably is great from a worker's perspective, given that wages are growing ahead of inflation. More of a challenge for the Federal Reserve, given that it's hard to see how that is consistent with their 2% inflation target. But lots to discuss as we kick off 2024, so please do join us on Morning Markets over the course of the week.